I highlight stocks that have great potential but not many people are talking about. Each video is under 3 minutes. Please subscribe and you won't miss follow-up on this stock and other market opportunities. Starting next month, the central bank will permit banks to buy back a certain amount of shares based on their income from the prior year. That constitutes a change from this year. Back in March, 8 big banks halted their share buyback programs due to the coronavirus. In June, the Fed required banks to halt buybacks and cap their dividend payments based on recent income. The share prices of banking sectors has been having challenging time and rebounding. Compare with other sectors as investors see shares purchase and increasing dividends are positive signs for stock prices. With central bank giving the green light again to shares purchase program today, a couple of large banks have already responded to the Fed's decision by announcing buybacks that will start in the first quarter of 2021. In a statement following the Fed's announcement, JPMorgan Chase said its board has approved a new share repurchase program of $30 billion. Goldman Sachs said it intends to resume its share repurchase program next quarter. The move was an endorsement of how well the sector has fared during the pandemic, which has ricocheted across the global economy. However, the Fed will continue to bar banks from hiking their dividends, a limitation that policymakers had imposed following its first round of stress tests announced in June. In this recent round of stress testing, the Fed put banks through 2 tough economic scenarios. The Fed said that in both scenarios, the 33 banks put through the test would collectively rack up more than $600 billion in total losses. However, their capital ratios would hold up fairly well, dropping from an average starting point of 12.2% to 9.6% in the toughest scenario, well above their required capital minimums. And each would keep their capital ratios above their required minimums. Both of the Goldman Sachs and JP Morgan stocks have run up substantially in after trading hours due to this news. With banks' return to their shares purchase program, some banking ETFs such as XLF could be a good choice too. Please like and subscribe to help this video reach more smart investors like you. No one can make better decision for you than yourself, and this is not an investment recommendation.